Without a doubt, the real estate market has shifted. Sellers no longer have the upper hand as they did not so long ago, as buyers now have more choice, more homes to choose from, that is, than they have had in years. But there's one chart I've been watching closely, and if the trend it's showing continues, we could see some big changes in the months ahead. Now, this is the Mortgage Purchase Applications Index, and it's starting to spike. Hi, this is Andrew with the Andrew Smith team, eXp Realty here in Frisco, Texas. And in this video, I'm going to break down exactly what this spike could mean, not only for home prices, but builder incentives and buyer demand. I'm also going to share how to use this insight to make smarter real estate decisions, whether you're planning on buying or selling in the months ahead. So what exactly is the Mortgage Purchase Applications Index? Well, what it does is it tracks the number of people applying for home loans across the country. Well, why is that important? Well, let's face it. Potential home buyers don't start the mortgage process unless they're actually interested in buying a home in the near future. Typically, when we see changes in this index, it results in sales where you see it in the sales activity approximately 1 to 3 months later. Now, as we take a closer look here, this dark red line represents 2025, while the lighter red line represents 2024. And as you can see, this time last year, we were in a downward pattern before we saw a little bit of a spike towards July, and then it dropped off again. But as you can see, this red line, dark red line here, is trending well above where we were in 2024. So this year, we are seeing more mortgage application activity than we saw last year. And as you can see right here at the beginning of June, we saw quite a big spike. And this is a big deal because this is known as a leading indicator. It's one of those metrics that kind of give us some insight into what is going to happen in the months ahead. Now, the thing to point out that is really, really interesting here is that this spike is happening at current interest rates. We're seeing this jump in activity even though rates have been hovering right around 7%. So you're already seeing increased buyer activity even though those rates are high. So it really begs the question, what will happen if rates drop in the second half of this year, as many experts are predicting that they will? The likely answer is that we're going to see an increase in buyer activity as more buyers return to the market. So what does that mean? It means more competition from buyers. It also means that once the excess inventory that we've seen build up over the last few months gets absorbed, we're likely to see an upward pressure on home prices once again. I'm not saying we're going to see massive price jumps. I'm not saying we're going to see bidding wars, nothing like that. But you are going to see upward pressure as more buyers jump into the market. Now, look, I want to preface that by saying, I'll be the first to acknowledge that nobody can accurately predict exactly what the housing market is going to do. If nothing else, the last few years has clearly demonstrated that. But it's understanding what leading indicators to watch, like the Mortgage Applications Index, and also the percentage of homes taking a price reduction. Those leading indicators give us valuable clues as to what might lie ahead in terms of the housing market. And I have to be honest, right now, those clues are pointing towards a more competitive market in the months ahead. So what does this mean for buyers? Well, if you're a buyer that's been sitting on the sidelines, welcome to the club. Most have, as we've seen, or if you've seen my other videos, home sales are way down. And many of the buyers have been sitting waiting for better rates. But in actual fact, based on what we're seeing right now, this might actually be a great time to consider jumping back into the market and making a move. Again, that's not going to be right for everyone, but if your situation fits, it could be. Why? Well, because right now you still have negotiating power on your side. You're still able to dictate the terms much more than you have been in years past. Sellers are flexible. There's more inventory, and in many cases, especially with new construction, you can take advantage of some pretty aggressive offers, especially on quick move-in homes or homes that a builder is closing out on in a community. Once the competition returns, once the foot traffic, the buyer activity returns, and we see an increase in the number of contracts signed, a lower rate might not matter as much if you're paying more for the house or you're losing out on multiple offers in certain cases. Again, I'm not expecting a repeat of what we saw, back in 2021 by any means. But again, just keep in mind that the new home builders are likely to reduce those incentives if buyer activity picks up. Now, if you're a seller, this is actually good news for you too, because more buyer activity means more eyeballs on your home, fewer price reductions, and potentially stronger offers if there's more interest. So if you're planning to sell later this year, now is the time to start preparing. That way, you're going to be ready to list as demand picks up. And again, as you know, if you've watched any of the quick move-in videos I've done specifically about new construction, the builders are hungry right now. They do not like finished inventory sitting on the market. And there's already indications that some of those incentives are going to be going away as demand picks up. I'll be honest, I haven't seen them go away yet. But one thing I have seen not that long ago, quite a few of the builders were offering permanent mortgage rate buy downs, meaning they were paying quite a lot of money up front on your behalf to get you a mortgage rate of maybe 4.99% or 5.99% fixed for 30 years. We've started to see the builders shift away from that. You're now seeing a lot more 2-1 buy downs, which lower the rate for the first couple of years, but not beyond that. Now, another data point that I closely watch, another one of those leading indicators, is price reductions, the percentage of price reductions in a market. Let me show you what I mean. This graph right here is from my weekly market update, and this is showing us the percentage of listed homes that are having to take a price reduction. And this goes all the way back to 2020. So if you see right here, this is when the market started going crazy, and look at the price reductions. They absolutely plummeted. When interest rates jumped and spiked right here in 2022 at the end of spring, look what happened to price reductions. They absolutely soared because all of a sudden buyer demand disappeared and sellers were forced into a position of having to cut price in order to try and bring buyers in and get an offer. Well, look here, after falling in the early part of this year and through most of the spring, right here, we're starting to see that tick up. So that tells us if you are seeing an increase in the number of price reductions, it's showing us that there's still weakness in the market in terms of buyer activity. And the sellers have no choice but to cut price if they want to get that property sold. This is a key metric to watch. We're not in danger territory by any means right now, but if you start to see this flatten out or start to decline, it's an indication of more strength in the market. Sellers are not being forced to cut their price. This data is available for every single city, zip code in the entire country. So if you want to track what's going on in the market that you're most interested in, please go ahead and see the link in the description. I've got a link to this actual Frisco market report. And from this report, you can search any city or zip code, register for it. You'll get sent it each and every week to track what's going on in your market. One last metric to point out on this chart is this market action index right here. This right here, think of it as a speedometer. This index is showing us the balance between demand and supply in a given market. So if you've got this needle here, think of it like the speedometer pegged all the way over here, there's very little supply and very high demand. A balanced market is a reading right around 30. We're currently at 32. So you can see that the market right now is fairly balanced. Last month, this was a 34, so it fell. If we start to see this number go back up, and you start to see the number of price deductions decline, it's an indication that things are starting to turn the other way. We probably will have bottomed out at that point, and you're going to start seeing activity increase overall. So what exactly does all of this mean for you? Well, if you're a buyer, this may be your moment. Before the crowds return, before prices climb, before those builder incentives vanish. If you want to get the process started yourself, I also have a link in the description below to my local preferred lender who can help you along that way and kind of go through what is available in terms of loan options these days. Now, if you're a seller, now's the time to get prepared. Clean the house, stage the house, plan, whatever it takes to be ready when momentum starts to swing back into your favor a little bit. Now, here's something I'm telling all of my clients right now, a bonus tip if you like. Timing really does matters, but preparation matters even more. The people who are going to benefit most from the market shifts are the ones that are ready before everyone else notices the change. I mean, let's face it, no one knows that a market has peaked or hit bottom until after it has, and it's either on the way down or on the way back up. Now, if you'd like help understanding what any of these trends mean for you personally, whether you're buying, selling, or just in the planning phase, let's talk about it. There's a link in the description to a free the link in the description to my calendar. And I offer a free 30-minute consultation for anyone. No pressure, no pitch, just a conversation to help you navigate what is going on in the market and put the plan together that is right for you and your family. So thanks so much for watching. I hope you found this information helpful. If you did, go ahead and give me a thumbs up. Subscribe to this channel for more updates just like this one. And if you've got questions about the market or what you're seeing in your own neighborhood, drop them in the comments below. I always read them and I always respond. With that, I will see you in the next video.